Me now is Anthem Vault CEO Anthem Blanchard to talk about a lot of things healthcare, but in particular I want to start with this news on Valiant and a reaction to see that the CEO going on medical leave, and that's all we know, could really crush a stock in the pre-market. What do you make of it?
Yeah, well, I think it's very sad news. I mean, I'm here in Dallas, and we've been faced with a lot of sad, tragic news, and the families in Garland and the greater Texas area that have suffered tragedy. So anytime you have a leader, a CEO, and a company that's done as well as Valiant, it's obviously of tremendous concern. But I think that ultimately leadership there will probably supersede it.
Well, no, and we've been covering the horrific weather coming out of Dallas, Texas. We're praying for everybody down there this morning. But I do want to move on to some other things that we're talking about this morning with you, in particular financial markets. You say that there's an increased credit risk in the markets right now after the Fed's decision to raise interest rates. What do you mean by that?
Yeah, so what we're seeing is really a deterioration of credit risk and lack of liquidity. So we've seen over $800 billion worth of U.S. corporate bonds. We've also seen lots of treasuries, hundreds of billions of dollars worth, in fact, from China, Brazil, Russia, different emerging markets that have been forced to sell treasuries to try to protect their currencies. So if you take a look at the ETF HYG, you'll see that there's been a deterioration already, really since about mid-year, but it's escalated since then on high-yield bonds. So I think with the increase in the Fed funds rate, I think that we're seeing this perfect storm brewing, and it could really potentially affect the banking system more greatly. I think it's something to watch out for.
But you know, higher rates, that's the story for 2016, whether it's on the consumer level, whether it's on the banking level. There's going to be a side effect on housing, at least somewhat, in the first 6 months of 2016. But how contained is that risk? I mean, you know, economists were waiting for the rate hike. We got it. You would think that the economy would be strong enough to withstand the Fed's move. And you're telling me you're not so sure about that.
Yeah, I'm not so sure. I mean, just taking a look at the primary dealers' balance sheets with some of the largest banks in the world that deal with the Fed, and they've been forced to take on lots of treasuries, billions of dollars worth, and at the same time as record amounts of corporate debt, 800 billion plus has been issued, their balance sheets are at record low corporate debt. Some of that is regulation-based, some of it is just that they're not seeing the reward there. So I think the issue that you have there, Cheryl, is that payment risk and the credit system and the banking system are inextricably intertwined. So you need to have a healthy credit market in order for payments to function. So it's actually one of the reasons why I've spent so much time in Texas. The Texas legislature here passed a bill in June called the Texas Bullion Depository Act, and it actually calls for a gold-based asset payment system that is immune from the risks of credit. So that way the payment system could function even if there were some issues.
Going back to gold,
yeah.
Anthony,
but Anthony, are you worried about the emerging markets and them possibly dominoing into our market as rates go up?
Absolutely, Anthony. I think it's a huge issue. I think we're just starting to see it. I mean, we saw the Shanghai have a market have a huge sell-off today. I think this is just the beginning. I think the Fed has to be really, really careful about how it's going to increase Fed funds rates. So we're already starting to see deterioration in high-yield bonds, which is a great canary indicator.
Anthem, what do you make of what's going on with Puerto Rico right now?
I think it's another indicator of a squeeze in credit. So, I mean, ultimately what you've had is you've had artificially low interest rates that have been manufactured by the Federal Reserve, and so you've had billions, hundreds and billions of dollars worth of debt that I think has ultimately been underpriced. I think that there hasn't been enough risk priced in, and you have a lot of long-term fixed rates that have been interchanged to what they call LIBOR, or very short-term rates, and I think that there's a really big disparity there, and I think we're going to see that disparity hit stocks. I think we're going to see it hit emerging markets. I would, especially anything that's non-blue chip U.S. Stocks, I think you're going to see in for a big downfall, and it should be good for gold.
You know, but here's the thing, Morgan and Anthony, and this is what concerns me so much about this rate hike, is, you know, if you don't have an economy that was strong enough to withstand the hike, and that was still being debated even when they hiked rates a couple weeks ago. At the same time, next year, all the stuff we're talking about, the energy sector, the job situation with oil, all of that, you're saying is going to have a negative effect. And we're looking at a flat year for stocks already.
So it was a very, very tough call. I still think they made the right decision because they've got to get into a normal pattern. I think what Anthem's talking about, which we're all worried about on the hedge fund side, is once the Fed zero monetary policy is over, people start to look at these things from a securities perspective as opposed to a macro perspective that things are going to continue to go up. And so that's what's happening right now.
I saw a single-digit, you know, forecast for this.
I agree with Anthony. If anything, I think that they waited too long to raise rates, and that may be part of the problem. I think that we'll probably continue to see over the next year, I don't know if you agree, incremental rate increases.
Well, I think
ready for that.
I think rates are going up, and I think the market's going to slow down, and hopefully we'll make an adjustment where you'll be at the intersection point where there'll be enough growth to justify market valuation, Cheryl.
Anthem Blanchard out of Texas. Anthem, thank you very much. Of course, our best to the folks in Dallas this morning. We hope that things improve when the sun comes up.
Thank you.
All right, thank you, Anthem. Well, don't